Manish, I just wanted to get your thoughts on a point that Vinayak was making, where a lot of the low-hanging fruit, like the speeding up of infrastructure projects, will take place. How do you then approach stocks like L&T, BHEL, which are a clear and direct proxy to the pickup in the investment cycle?
Well, I'll make 2 points. The first, I'd like to just say, and I may be slightly different from the general view about PPPs. I think fundamentally the government has no business holding on to assets which are running in manufacturing and so on. That they are producing steel and they are running a hotel and they are running an airline, but they don't seem to have money to build a railway line or to build a port, and they want the private sector to come in. It is the highest risk capital which has to come into infrastructure, and the government has the lowest cost of capital. So it seems very strange to me that you want the private sector or the FDI to come into infrastructure, whereas the person who can take the most risk in this country is the government, and they want to hold on to the lowest risk assets. So I would hope for that the government actually massively exits businesses which they have no reason to be in, create the capital from there and kickstart the infrastructure sector themselves, rather than holding their breath and saying the private sector will come in. Because frankly, how many banks do you think in the next 6 months?
Would you be disappointed? Because going by Mr. Modi's track record, he seems to believe in an efficient public sector rather than disinvestment.
But efficient, if you think of where was he putting his bets, where there was gas production, for example, coming out. Those were the kinds of places which he was encouraging. He wasn't saying necessarily I want to be running equivalent of a Gujarat state hotel corporation or a Gujarat state airline corporation or a Gujarat state steel company.
Okay, fair enough.
So all those they have no business to be in. Anything infrastructure related, energy again, globally is becoming a national asset. You cannot be having ONGC starved of money to go into E&P and then you say we'll let the private sector come in over there. While there is a big role for private sector there, but the state-owned national companies, Petrobras and all the others, have to become monoliths and to go and compete with the Chinese over there. So I would say there has to be very massive pruning of the public sector to privatize, which in fact the last NDA regime had done. Create that capital and recirculate it back into creation of infrastructure. Then the private sector could come as minority partners over there, rather than saying let the private sector take the risk. How will banks fund them?
The complete mismatch of...
That's an interesting point, because if you see the market over the last 6 months, the 2 stocks that have been re-rated have been BPCL and ONGC.
They should be.
But do you think it's easier said than done right now? Because at the end of the day, Mr. Modi himself had made it quite clear that the first right on resources is with poor people. So how do the two match?
There's no contradiction in that.
Okay.
So the right of resources is with poor people, but again, if I take the metaphor that you can give a man a fish or you can teach a man to fish. And that's the difference between being left of center and right of center. That when you give, when you give money away, for example, let's say we use the same amount of money as went out in Narega, but instead of the money going and ending up in purchase of, I don't know, cigarettes or motorcycles, maybe it goes to creation of low-cost housing. Maybe it goes for skill development, so they can get vocational training with that same money. So I don't necessarily buy the argument that subsidy bill needs to reduce. It still goes to the poor person. But the usage of that money is far more effective and impactful.
Manish, the other interesting bit that I've been asking people is that even today, if you see the losers, they are all IT names and a couple of FMCG names. So is this just that tectonic shift in portfolios that is continuing, or is there some worry about the strength in currency and what that would mean to IT companies' balance sheets as well?
I think there's a bit of both going on. So FMCG, clearly people are allocating money away from that into the more cyclicals and the banking kind of names. IT pharma, I think, is being simplistic, that people are thinking the rupee is just going to break out and go to 55 and therefore the earnings may not come through in IT pharma. The reality is this is the most competitive 2 sectors in India, competing with the rest of the world. Also on this whole rupee front, we shouldn't lose sight of the fact that the Japanese as well as American corporations have so much money which has to leave their shores and get out and get invested. And the natural candidates to take over businesses like this will be, I would think, start with IT pharma. You're seeing large multi-billion-dollar deals in pharma all over the world. Although we've had one Japanese going the other way in India, but the interest for others to come in is very, very serious. Similarly, on the IT side, I don't think we should rule out one of the very large IT companies being in play at some point in the next 2 years.
Is there a worry that a government which has absolute majority, which does have a Swadeshi tilt, could block such deals?
It's, I think, misguided to think about the Swadeshi tilt, because it is a government which is open for business. The stated intent has been we want FDI and everything. The only thing they said was no multi-brand retail. But they also went on to say that we are not going to easily reverse things which have already been announced, because we don't want the policy flip-flop and retrospective amendments and so on. So I think if we think of FDI coming into India, and I in some sense represent that as well, what's the big challenges in India? You need investment to come in. You need job creation to happen. We need, I think, 50 million jobs to be created every year. You need skill development to happen. And in that sense, technology which comes alongside with FDI also comes in. So the spaces that one is looking that will be encouraged are in a sense not so consumer focused, but a lot more what I call export focused FDI. In that sense you could call it, the Swadeshi movement. But having said that, overall when all the people that one knows as well within the party, they are right-wing thinkers. They are not
iconoclastic.
Yeah, they're not iconoclastic that foreign money is bad and so on. Certainly not the case.
To get back to the question that Anuj asked you about IT and pharma. So are you saying that stay invested in IT pharma?
Oh, from an investment perspective, it's opening up the best opportunities because the valuations are very interesting there. So while everyone's getting swayed by, and clearly the momentum pack will lead, and that will be the cyclicals and banking in particular. But the percentage gains, if you were to look a year from now, probably you'll get it from the autos and the industrials, but I wouldn't be surprised if IT poses a surprise 12 months from now.
Okay, I have one question, Manish.
Sure.
History has taught us that the first couple of years post an election, you get the best returns in the mid caps and the small cap space. Do you think this time that could happen?
Yeah, completely agree with that.
Yeah.
Because they've been a beaten and bruised up space. Even today, I am not sure what the Nifty Junior has done. Maybe you could pull that up. And a lot of these mid-cap funds, if you look at their aggregate assets, they're probably under 1,000 crores each. I won't be surprised if they get a lot of inflows.
Actually, the Nifty Junior is outperforming. It's up 3.5%, while the market is up 3%.
50 index, Sonia, that's something that we don't talk about. That's also similar to the Nifty Junior, is up 5%.
Because there are some big gains, I mean, real estate, banks, etc. So is it still the bank and beta trade that you would play for now?
Well, first of all, I want to just say for the average Indian who is not in the market, please don't come into the most momentum side of the market all over again. Get the allocation right, come into well-run funds. Don't do all these cute and clever things of saying I'll buy real estate. That's the worst way to restart if you're coming back after 5 years into the market.
Actually, public memory is very short. Right. This bull market started somewhere last year, sometime last year. And at that point, the leader was IT and pharma, and everyone kept saying that, normally in a multi-year bull market, the leaders actually lead the market. So in that sense, do you see after this, euphoria is done, the money to shift back to IT?
A classic bull market will keep climbing a wall of worry. And in that wall of worry, the sector rotation has to keep on happening, and markets don't peak out at 15 times forward. If you look back in history, you'll get 20, 25 times forward multiples for the entire market. And within that, certain sectors will get completely mispriced. I think in the if I recall the last bull run, if I recall engineering stock multiples, do you recall what the multiples were? So
I think
it's very early to be thinking about calling this as a top of a bull market. I think it is a beginning. And interesting days certainly lie